Hey traders, what's going on? Jamie Saettele here. It is June 6, 2018, and this is the Midweek Strategy Webinar with Jamie Saettele. So at SB Trade Desk, let me know that the sound's good and that you guys can hear me. And once I have confirmation, I will dive in. Okay, good. All right, so dollar, we're looking at US dollar is rolling over from resistance. And the big question, I guess, that we want to try to answer, um, first of all, was that it? Like this rally into the end of May, was that the final? Is this like the bear market rally within a very massive downtrend? Certainly possible. Not going to be completely dogmatic about it. In other words, we get into some levels, we're going to want to, maybe consider tactical trades against the dollar in certain places. And where are those levels going to be? So for me, I'm looking at, so first of all, this fork off the low here, good sign from a bearish perspective that we've broken below the center line here. But the big levels to know, we've talked about these for a couple of weeks. I think the biggest one is actually 11.840, 11.850. Okay, 11.840 is going to be your 200-day average. It's also, if we scroll out, we've got longer term slope confluence areas around there. So this parallel, all these parallels that are based off of simply the 2011, 2014 trend line are really key, right? They've been very useful. You can see the resistance we failed at up here, right? That's the underside of the 25 line that we've talked about ad nauseum for a very long time. And then if I throw just a parallel over this, right, over this February high, watch what happens when I extend it all the way back in time, right? You do see some very important pivots on that level as well, notably back in May of 2014. Kind of crazy how these parallels can work so precisely at times. But bottom line here, that is where I believe we want to concentrate our efforts as far as, some dollar support is concerned. And that's a good ways down, right? Now, there's going to be levels before then that we're going to want to focus on. And the only level before that really is probably 11.880. That's going to be the yearly opening price, and it's essentially down near the May 14th low. Okay, and is that the May? No, the May low is over here. That's the first day of the month. Actually, was the May low. So actually move that down there. Perfect. Okay. So another reason why we would want to be looking towards 11.850 is this. You've got this head and shoulders top, right? You got two shoulders here. This is an hourly chart now. Head, two shoulders. And if I draw the measured move off of that, right, just take the width and extend it down, you get the target at 11.853. Okay, so essentially write down 11.840, 11.850 in your notebooks or wherever, and that is where I believe we're going to want to maybe even go long the dollar for a bounce at that point. I don't, really want to. Certainly, you can have some bounces before then, and certainly it could be completely wrong on this, but given the major resistance we've come up to, given this head and shoulders top action, that is where I'm going to concentrate my efforts down here on 11.840, 11.850. All right. Now, if we take a look at, let's look at some of the stuff I wrote over the weekend. This was the longer term chart I wrote, piece I wrote over the weekend. This is wrote a free piece. Every once in a while, I do have to write a marketing piece. Otherwise, no one would know we're here. And this is DXY we're looking at now. You probably read this, but there are a couple of key points here. One is the non-confirmation that we had with DXY and Euro, right? So Euro took out this November low and DXY did not. Typical non-confirmation that you do see at a pretty, at a decent turn. And obviously that turn's happened, at least in the near term here. Whether it extends or not, we don't know. But given all the evidence, I kind of like the idea that it will extend for a bit. And we also have the dollar Swedish krona chart, right? Dollar SEK. So this chart itself has us looking lower in the dollar, at least for a bit. Again, you can see here the 200-day average is 850. So kind of let's take a look and see where that is now. I do think it's important to follow where the where dollar SEK is trading. So dollar SEK is coming into a trend line right now. This is the 4-hour chart. So you do have a little bit of maybe a bounce right here, but I would be looking for this to break down again because we have come into just such a huge level. All right, here's the chart from that report. Mahai has a question here. He says, here's one thing I do not understand. Over the long term, Euro seems to go lower, but also the dollar you expect to go lower. One of them is probably not going to happen. Saying seems to go lower because we have 1, 2, 3, 4, 5 lower already. So that's a good question, and let's discuss that question. So you're saying over the long term, Euro dollar seems to go lower. Well, I don't know if that's necessarily the case. Let's do this. Let's review. Let's go over the longer term charts, right? That's where I think the bread and butter is. That's the money maker, I think, are the longer term charts, right? Execution and entry on short term time frames, of course, is what we want to perfect or try. I can't say perfect because there's no perfection in this imperfect world of trading, but that is where we're going to get our good entries for risk management purposes. But over the long term, I'm not so sure or so positive that Euro is a long-term bear, right? So let's look at a long-term chart. I'm just going to kind of go through the charts that I updated on Friday on the long-term page. So if we look here at, let's see here what I have. Okay, Euro. All right. So a few things here. One, this long-term chart of Euro, if we made a major low back here in 2017, we've hit the uptrend line and we really shouldn't go lower than where we just went to. If we want to go really long-term, hold on here. If we want to go really long-term, you can say that we've actually hit, this is going to go back pre-Euro, of course, to the Deutsche Mark, but you could say that we've actually hit the really long-term trend line that goes back to 1971 and crosses through the 2000 lows and then crosses the 2017 lows. So I'm not so positive that the Euro is lower over a very long-term time frame. I can count this as 5 up. This could be a 3 down, and we don't need to live too far out in the future, of course. We're kind of concerned with where you're going to get decent resistance for Euro and decent support for the dollar over the next you know, couple weeks. That's kind of the time frame that I'm trying to operate in. But yeah, I'm not so positive that over the long term, as you say, that euro is necessarily lower, right? Mahai, if I may ask, what is your, I guess, reasoning, if you will, that long-term euro is actually lower? We will wait for Mahai to answer that if he wishes. But for now, let's move on. The current correction seems to be 1, 2, 3, 4, 5. Okay, so let's talk about that. Let's go into this. If we are looking at this euro chart, here's a daily. We can have, we can look at this from two ways. One, we can look at this as a big double bottom in which we broke out, right? Came more or less, hit the target, take the width, extend it off the top. And we've come back and now we just retested it, and it's not impossible at all that we do this, right? We actually go higher from here. You're saying this move down is a 5-wave move to the downside, right? That's what you're thinking. What if it's something like this? What if this is just A, B, and then this is 1, 2, 3, 4, 5, C, right? Even if this is going to unfold in an impulse, right? We would expect to get a correction back towards the 38.2 at minimum, and probably something like the fourth wave of 1 less degree, right? Which would actually be up here at 120, which is where the 200-day average is. And that's also going to be equivalent to the US dollar level that we just talked about, you know, at 11.840. So even then, we're still looking, I think, at 250 more pips on the upside. And then you know what? We'll call that our decision point, and then we'll try to figure it out from there. So let's throw a little Elliott channeling on here. Let's go 1, 3. And take it off of 2, right? So this looks kind of weird, right? Because you're drawing it off of here, but that's the Elliott channeling, right? So you draw it off of the 1, 3 line, extend it off of 2, and even then we'd be looking up here towards 1920 or 30. And an unorthodox channel gets you more in line with what we're looking at over here at the 1980, you know, 120 area. So again, let's not go too far out in the future. My contention here is that right now, at least, we are higher in euro. And then once we get to the decision point, we'll try to make a decision, right, based on the evidence that we have at that moment in time. So, you know, I guess the main point that I want to get across right now is that we've come into, like I said, what do we know? We know that we came into a massive level for euro, right? We know that we've responded to that level. And we know that resistance is at minimum is probably going to be 1850, but probably more like 120, right? So we're targeting a piece up at the 1820 spot. Like to go a little shy of that 1850 level, and also you have the, you know, the former low here. That's why we're targeting this right here. There's that 1823, so that's a level of target. But let's get into the short-term euro chart real quick. If I go a 60-minute chart here, okay? We're actually trading very well on this fork right here. Just channel, right? can see last night when guys from the ECB were speaking, this is why I think this fork is actually important in the short term. When these guys were speaking last night, what happened? That initial spike up right here failed right on the median line, right? Came in, ripped above. We've more or less been resisted on the way up here on the 75 line. Almost hit that, an hour and a half ago or so. And if we come in a little bit, I'd be looking for support 1760. If things get a little more hairy, then I guess you're talking all the way down here to these former lows, former resistance levels, last night, and that's going to be down near 1730. Hope we don't have to suffer through that, but even the upper channel line on the short term is going to be that 1850 area, which again is that 38.2 spot. So we do have some really good levels, even in the near term, that actually coincide with some of the longer term levels, based on fibs and everything else. So bottom line here, looking for, more upside with euro in the near term and kind of on a, more of a swing basis, if you will. All right, so that's the deal with euro. But main point here is that US dollar coming from big resistance. US dollar is made a head and shoulders top. It measures to 11,850. 11,840 is the 200-day, and we got parallels down there. So that's just a really, 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 really big area to pay attention to in the dollar generally. Okay. All right, so let's take that knowledge and let's move ourselves to the British pound. Again, the long-term chart that we went through over the weekend, 2007, 2014 line, we've come into that area. I do like euro high a little more than British pound on the upside. Again, we have not quite hit the upward sloping line that defines the angle of the uptrend from the 2017 low. But we do have really good near-term levels to look at with respect to British pounds, and that's going to be over here. All right, so here's a 4-hour chart, okay? Can change the colors up on this a little bit. You see this parallel right here? Right, that was resistance throughout May, and that's still a little higher, okay? That's going to be about 34.80, which is pretty close to the yearly open of 34.99 to be precise. So that's an area for initial resistance, call it 34.80 to 35.40. My focus here, again, I think is actually on buying some weakness in cable. Again, the chart's not nearly as clean to me as euro, even in the near term. But if we take a look at, say, just a weekly chart, you can see British pound, nice little candle last week, right? That high last week is 33.64. I would look for support at that high, the high from last week at 33.64, and I'd look to take that up towards, again, these highs here, which is 36.17, this high over here, which is 36.55. Looking at these weekly charts, sometimes it's just much better, much cleaner. You can see exactly where the big levels lie. So you can see the huge levels up here. You've got, this is the longer term average. That's actually a 3-year average, 156 weeks. So that area, a good deal higher, 36.50 to 37.11. And then looking for support at 33.64, last week's high, okay? So on a swing basis, those are probably the levels that we want to pay attention to. Another thing that you don't want to get lost in here or forget is the fact that the seasonals for the dollar, we've kind of entered a pretty bearish period for the dollar. June is historically not one of the better months, right? It's one of the worst months for the dollar historically. So do not forget that, simple observation. I'll try to run some stats on it, but as you know, you can always go to the seasonality charts too and just see, exactly what I'm talking about. I mean, you can see here, this is the US dollar index. We, for the most part, are entering a weak period. Seasonality, of course, does not always work. Nothing always works. Here's British pound. British pound is entering after next week one of the most bullish periods on a 30-year basis. On the shorter term basis, 5, 10, 15, we're already in that bullish period. Even dollar yen, which I know is kind of pressing this resistance and may or may not stop us out on the rest of that position, but dollar yen as well has entered the bearish period on the shorter term time frames. On the 10, 15-year time frames, we are talking about maybe a week or two more before we start to see accelerated downside. But let's get into the Australian dollar, New Zealand dollar, and Canadian dollar, because these are the ones that tend to actually have really good Junes. You can see Aussie dollar has entered that period now. We would be looking for upside on a seasonal basis. Aussie dollar is in a super crazy, interesting spot right now. We're right there. I mean, we talked about the 76.80 spot. What's the high this morning? 76.77. So Aussie is at what I would call decision point right now. Again, tough for me to want to short this here. I'd call this a big energy point, right? You have the 2016 trend line underside of it right here. You have a very well-defined trend line that goes back to February and touches all these points, right? Very precise. So this is a massive level. I don't think you break through it easily, but I do think that you break through it eventually and eventually get up, up towards this 77.60 area, which is also going to be your February or early February low, right? So from a trading basis, really short term, sure, you could try to trade the short side here on Aussie, right? But there are levels to watch for support. Notably the center line here, which is 76.40, and that was resistance back here late last month, late May, right? Last day of the month, in fact. That's the first level to look for support. That's probably where I'd expect support, given, again, the fact that I think, the dollar's lower. A setback all the way back to, the 76 area, which is where you have, your horizontal levels. So you can see that high here from 531. You got the low from 6.5. That's yesterday's low. That would be, I think, a bit much considering the dollar's already rolled over. But be aware of these levels. 76.40. Again, I think that euro is a better bet on the long side here than necessarily Aussie is at this moment in time. It's also, we've got huge spots here in Euro Aussie, right? This is a chart from a couple days ago. And you can see Euro Aussie, while we have had a massive drop, probably a third wave. In this case, the coming bounce probably will end up being a fourth wave, right? But either way, we have a corrective process that we need to get through. So even if this is an impulse 1, 2, 3, I'd be looking higher in a fourth wave up here. Again, probably back to at least this high from 6.1 at 55.33. Okay. Again, I do not like doing the whole fitting all the pieces together like it's one huge puzzle, saying, well, because Euro Aussie's at support, therefore Aussie has to go down and Euro has to go up, right? You get yourself in a lot of trouble with that type of thinking. But in this case, we just, objectively looking at this chart, you have the channel width, right? The full channel width has been hit on Euro Aussie. We've responded to it. There's also actually a DeMark buy signal on that daily, and we're starting to see the market is responding to support down here, right? Go to this Australian dollar chart. The one thing that we cannot forget is that we've come off a really big level from support, right? Also back above this 3-year average. That's why I'm so wary on selling into this level right here, right? It seems like kind of a trap to me. So, if you're going to do it, tight stops. If you're going to do it, wait for at least some sort of a reaction or spike or whatever, maybe a good 4-hour reversal or something, but just be aware of where, just be aware of the fact that you are at a big level, but that you've also come off of just huge support, okay? All right, moving on to the New Zealand dollar. I still like Kiwi higher a little better than Aussie, just based on the fact that you don't have seemingly this overhead resistance that the that the Aussie dollar has. So in this case, you do have a very clean fork, and I would actually be looking to buy back down here. I know that we've had orders to buy back on near the weekly open, 69.80. The last couple of days hasn't gotten triggered, of course, but trading real clean on this fork from the May low, May 7th or May 16th low, excuse me. And you can see we're basically trading between 75 and 25, a little higher than 25 actually. So if we did get a dip here, we'd probably be looking to buy down near 70 at this point, right? We're currently 70.40, so 40 pip dip wouldn't be all that, all that much in the grand scheme of things. You can also see that the 70 area is pretty good. I mean, going back to May 1st, right? 70 support, 70 resistance, 70 resistance, 70 support yesterday. So let's see if we can get that, and then I'd be looking to take it up initially to the yearly opening price at 71, and that is also the underside of this channel right here, okay? 70, 90 to 71. So your levels for Kiwi for at least the rest of the week going to be set, oops, I just screwed that up, going to be 70 and 71. So simple, right? 70 and 71. What about the Canadian dollar? Probably one of the biggest levels in any market right now is where the Canadian dollar is trading. Right, again, we're just reviewing what we have from the long-term page last Friday, and you can see that the retracement, we've hit the 38.2, is 30.66. It's actually 1 pip away from the high yesterday. Going all the way back, you've got the high from 2009 up there. Some people will say that it doesn't matter looking that far back. I don't think that's true. These long-term levels are there for a reason, and that's why we see the markets respond to them time and time again. But again, you also have this 3-year average, right? The 3-year average at times can be extremely precise in its, identification of support, resistance, what have you, and we've hit all that. So clearly the week is not over, but if you're just looking at a simple trend line or, a channel, the market has responded to these channels time and again, right? Center line here, notably, very close to 25 line, 70 or 75 line, 25 line has been important as well, right? Support break actually last year at this time. Last June is when we had the big break in dollar CAD to the downside. and then, resistance in December. And this is a good looking, candle, I think, if you're a bear, right? Wait for the week to be done. Don't even look at the news. I know there's all kinds of stuff tariff wise and not, but this is your decision point in the Canadian dollar. Okay. And then if we zoom into that on a short-term chart, this is the chart from last night. Kind of come down and hit some initial support here. On dollar CAD. This is, by the way, a high volume level, 29 or 28.78 from a couple days ago. I wouldn't call this the cleanest picture in the world as far as a 5-wave pattern, right? But my trading focus here is just shorting a bounce into resistance, right? I know that we've hit massive resistance. I know we've hit that long-term trend line. And because of that, I'm looking at, shorting strength up into the 130, 130.20 area. 129.88 would be your 618 if you continued up from here. So work in progress on the short term, but longer term, we've hit resistance, we've responded to resistance. Therefore, my inclination is to short this long-term resistance. Excuse me. With that, why don't we take a look at where the crude market is trading. So crude, we are still sitting on the support. I do think we're in for something of a bounce here. Again, I'm just kind of rehashing the levels from last night in the post, but you get a bounce here. I'll be looking for a lower high. Okay, I'll be looking for resistance on the downside to take it to the downside. Maybe it's this 4-hour chart that's going to be key, right? 200 period average on the 4-hour chart. At times you can get really good responses on that. On the uptrend on the way up, right? Throughout the second half of last year, we did have support on that. So maybe look for resistance on that. It's still early. I do think that we're in for a bounce here. I know this feels really scary right here. And I would not be hanging on for dear life with a long here. I'm not long. I was short crude, and I got out of crude when it hit this, 2 days ago. I guess it was right here, actually. But if we get a bounce, I'd be looking for resistance starting at 67.70. That is your high from April 13th. It's also the spike low from the Iranian nuclear deal, back a month ago on May 8th. So that's kind of my thinking with CAD and crude. I know the two have been kind of disconnected for a while. How long that lasts, I don't know. It's been a long time, but eventually it'll come back into play. And if we do get a decent bounce here, would not be surprised to see the narrative suddenly shift, right? That, oh, the Canadian dollar is trading with crude again, right? Dollar CAD can fall 300, 400 points if crude gets a $3, $4 bounce or more. Aussie still strong. Dollar yen, this bastard of a currency pair. So what is going on with dollar yen? Look, this is, I thought you had a high in yesterday. This parallel, a beauty. Today, of course, we go up into the 200 period or 200-day average, 618, right? You got these highs over here. Clearly the level is, important because we did trade up to 110.23 last night and we've pulled back off of that. Confidence here is nil at the moment. So I don't want to spend too much time on this. because I'm not really exactly sure what the hell's going on. But, I have us here at resistance. If we get stopped out, so be it. And, go back to the drawing board and see, see if we can figure out what is actually happening with dollar yen. But this near-term chart on dollar yen as well, again, had this 5 waves up, thought it was done, get another push. So all I can say here with dollar yen, sometimes the best thing to say is just I don't know. And with dollar yen right now, that's kind of the case, right? I just don't know. I can say that we're resistance. I can say that I'm looking for a pullback. All that's fine and dandy. But if it wants to keep going higher, I'm not going to sit here and fight it. Either way, we're either going to be stopped out of break even or we're going to have a decent gain, right? That's all there is to it. Okay, what about, we've gone through majors. I want to spend some time with the indices here. Mahai's got a good comment here saying I'm wondering if we have so May 21st, hold on here, the 24th. Right, I know exactly what you're saying. So what you're saying is the following. I was thinking that too, and that this is 1, 2, 3, 4, 5, and this is A, B, and then this is C, 1, 2, 3, 4, 5, or something like that. And that's certainly possible, and actually would make a lot of sense. If that were the case, then we're probably trading up to 110.50 because you would draw your fib, your 618 from here rather than the whole way down. 110.50 is also a square root level, by the way. So that's a level to pay attention to. You've got the low over here from, what is that, 518 up here at 1060. So 110.50.60 is going to be a spot to pay attention to in dollar yen if we get over this level. But man, this level's big. So something to pay attention to. And with that, why don't we look at the Nikkei? Which is back at the yearly opening price and back at this parallel. So, hindsight always, I guess, 2020. And when this drop happened the other day, I guess last week, 529, 530, probably should have just said, all right, I'm out of dollar yen altogether, but didn't do it and can't go back and change it. A, B, 1, 2, 3, 4, 5. That actually does make a lot of sense to me. And in this case, if we draw the 618 from here, we actually are at it now. We're also at the yearly opening price as mentioned. We're also at this parallel. So yeah, I'm looking for this to roll over, but I've been looking for it to roll over, and it's dollar yen and the Nikkei, they seem to be kind of just held up like artificially, and that's not me making excuses by any means. That's actually, it's a known thing, right? The Bank of Japan is the biggest buyer of financial assets in that market by far, right? They own a crazy amount of stocks and bonds and everything else. So I think that's why probably in this market, in the Nikkei, it's even more pronounced that when you go up, it's a grind, and when you go down, it's very, very quick. So we're already there to 618 in the Nikkei. We've got resistance here from former lows, 515, year open. If we're going to roll over, this is going to be the spot to do it. not holding my breath, but looking for that to happen. Why don't we look at the Dow, the S&P, and the NASDAQ? All right. So the Dow has been the weakest of the bunch. We are pressing against the center line from, if you were to just draw a channel from the lows back in February, it puts you right here, right? So a lot of people have been talking about how great the NASDAQ is lately. The Dow, to me here, actually looks like we might be able to trade up to this level, 25,600, which I know doesn't make any sense if the Nikkei is going to roll over. But we could get different sectors that, for example, the Dow has a lot of, and the S&P have consumer staples. Those have been killed this year, right? If those start to pick up, then maybe you start to see this outperform the NASDAQ and vice versa, right? The markets haven't been a clean relationship as they have been historically, right? We've seen periods where we've had the Dow up, the Nikkei down, or the NASDAQ up and the Dow down and dollar yen down, but the Nikkei up. It's just they've all been their own markets so far this year, and really for a couple years. But Dow pressing a level here, don't have a strong conviction right here. The place that I'm looking to do something is going to be in the S&P 500, and that is a chart from the weekend that I put out. If we look at that chart, this is the spot I'm talking about right here, okay? Basically 27.85, going to be over this high, 27.88, I guess technically would be the spot, but you get the idea. And that's going to be this massive upper parallel, okay? These parallels have been golden. I actually have this one in gold, the color gold. And the magenta parallel, which has been resistance and support, since 2013, including very recent, right? Resistance in December last year, launch, and some resistance here, tank, right? That is in 30 handles, okay? 30 handles is not far away, especially in a headline type driven market like this. So pay attention to that level. I think this is a great short up here. I'm going to say it's 27.88. Great short in the S&P. Okay, what about, here's our short term. This is a 10-minute Euro chart, by the way. Euro just got into support. Looky there. I want to see us higher now. Mahai says with what target? That I can't answer. That's a step ahead of where I'm at. So what I would say to you is horizontal levels, so 27.20, and then 26.80. That's where I'd be looking. One thing that you can do as well is kind of look at when we have come into these levels in the past, right? Where did the market go after it hit that level? So if we hit 27.88, the gold parallel is probably too much at this point. But again, I'm not concerned with that. I'm concerned with where's resistance. And resistance is 27.88. Okay, let me bring in a different chart. This is we're looking at square root levels here, okay? Square root level at 27.35. So if we go 27.88, I'd be looking to trade one square root down initially, which would be 27.35, okay? So you're talking, 52 points is where your target would be. That makes sense because that is the old resistance. So if you did trade up here and you turned over, that's where you'd be looking for some support. Okay, the yearly open is 26.84. That would be the next level. It also depends how you structure the trade. You're doing an options trade, right? If you get up to 26.88 or 27.88, those are the types of levels where you buy, you can buy what I call a lotto ticket for the downside, right? Buy some puts that expire, also, maybe out into September because you're covering yourself for the seasonally bearish part of the year, right? June through September is historically a pretty bad 3-month period for the S&P, equities at large. But that is where that's how I would think about it, right? First, think about your resistance, or where you're looking for a turn, right? Or support if you're looking to be long. Then, if it starts to play out, you can look at where you had prior support and prior resistance. That way, you're not really trying to predict the future, right? You're just trading the levels that the market has offered you. And in this case, those are the levels I'd be looking at. So 27.88, 27.35, 26.84. Also, I see you talking about the triangle. Have we exited this triangle? I'm not so sure. This could still be a number of things. This could be A, B, C. This could be a larger D, and then you could have the big E wave down, and then you could go higher, right? Don't forget, triangles, consolidations often go a lot longer than people think, and they tend to, what we say, morph, right? They tend to morph into larger consolidation patterns. And in this case, especially after the run that you had, say from August of last year, right? This was a hell of a run. Do you remember what it was like then? Do you remember the headlines, all the insane bullishness? There was all kinds of record inflows. There was all kinds of record sentiment readings, right? I know we've been sideways since January, so we're going on roughly half a year now, but do not, be surprised that this needs to take even more consolidation for that to happen, right? So, just kind of aware of what happened back here in recent history and aware of the fact that it takes a long period of consolidation to correct, if you will, the extreme sentiment that did occur over here and the extreme buying, the extreme speculation that did occur over here. So after all that, 27.88, burn it into your mind. All right, let's take a look at, let's see here. Here's the DAX. DAX, all right. So beautiful channel back to 2016. Very difficult for me to reconcile what's gone on here because this certainly looks like a flat, doesn't it? Because you get the 3 waves into a low. So this would be an A, B, and a C. $618 of this drop is up here at 12,950. I'd be looking for something more like the median line. Again, that's been the level that's been, influential for several years now. So for the DAX, I would simply watch up here, basically pretty close to this 528 high, right? Up near 13,033 before I'd want to do anything on the short side. Let's take a look at gold. We'll look at silver, and I also want to look at Bitcoin because that's kind of getting interesting right now. Again, here's the long-term chart from the weekend. $12.70 if we dump, or even $12.30 if we really dump, right? I noted in the long-term update that COT is already at 2-year lows. In other words, they're positioned like they were over here. So an upside surprise in the gold market is not something that would be a surprise. And finally, it does look like we are trying to get out of this channel, right? This morning's bar actually hit the top side of it. So there was a lot of confusion and angst amongst the bullish and bearish crowd here. Hopefully this kind of resolves the issue, at least for a little bit. So on a very, very, very short-term basis, I like gold higher. I wouldn't risk anything on a long below this morning's low, 1293. Okay. You're still in a, I wouldn't call us, in an uptrend here. 200 averages right here. So, 1293 for a stop, targeting maybe just 1308. I know these are like minuscule numbers talking about here, but there isn't, you got to do it, take what the market gives you. But 1308 is certainly a spot to pay attention to. You get over that, then maybe there's something to talk about. But more money's been lost trying to get ahead of the breakout, right? Trying to predict what's going to happen rather than just giving what the market takes. We're all guilty of that. I'm certainly guilty of that. Look what dollar yen did, right? We're sitting down there at 108.40. Probably should have gotten out last week. Instead, held on to it and now basically scratch. But if we get through here, then maybe there's something to talk about as far as gold's concerned. But as of right now, simply these are the levels I'm looking at. Silver, just an insane amount of consolidation. You know that you've been in a tight consolidation when you're trading at the 200-week average, the 3-year average, and the 1-year average. We are essentially as coiled as a market can get. I don't know if I've ever seen a market this coiled before. And yeah, it's simply put, there's a ton of energy here. On a very big picture basis, 1734 is your breakout level. If that happens, you'd be looking for a move from the width of this, and that would take you to 2165, which would be above the high from 2016. I would say that this seems to jive really well with the so-called narrative of the dollar turning over. But we've got to see, show me something, right? It's got to show me something. I live in Missouri. They call it the show me state. But it's got to show me this, right? At the moment, we are simply in a tight consolidation. Think of what I just said about trying to get ahead of the breakout. Maybe like cheap calls on the upside for silver is maybe not a terrible idea. But again, how many times can you be fooled by, a market moving up and then not following through? So, draw a line over here. You get through 1735, maybe you've got something to do. Okay. Ziad says, I spent 5 years going to school in St. Louis. Awesome. Some good schools here. WashU. Ziad is like the Harvard of the Midwest, as they say. So some very intelligent people in this webinar. See, I knew all the SB members were extremely intelligent, extremely smart. All right, let's look at Bitcoin. Bitcoin is sitting on a giant level. I do believe we looked at this last week. If this is the center channel from the 2011 low, and every time we've come down to this level this year, we've actually gotten a bounce. I'm looking for Bitcoin to rally from here, but then fail. So this screams triangle to me, right? A, B wave, C wave, D wave, and then looking higher in this E wave, I guess, before we really fall apart. And remember, what we want to do is we want to find the alternating 618 legs of Bitcoin. That puts you at 9,200, which is a big move from here, and it's going to put you in the vicinity of the triangle line, right? So go back from the February or 220 high, I should say. It is the February high. February high, May high trend line. That is where you're looking for resistance before this thing falls apart. So really good upside, I believe, for Bitcoin right here till 9,200, and then I think that you're going to get an absolute shellacking. The sentiment will probably be extremely bullish if this starts to play out. The Bitcoin crowd does like to come out of the woodwork. They get awfully excited, very quickly. So watch your Twitter and see if people start to scream to the high heavens about Bitcoin going to 100,000, right? But when it's at 9,000 is when I would start to pay attention to the downside. Let's see if this has a 618 on it. Not quite. That would be more like the lows, but you get the idea. This one I think was pretty close. Yeah, that one was really close. So you can see here the alternating legs. So the A wave and the C wave. C was almost exactly 618, right? It was a little shy. It was $100 shy, but in this market, I don't think that's too big of a error, if you will, right? All right. So getting a nice bounce on that short-term euro chart. Here we go. See that 10-minute chart, euro? Greatest thing about technical analysis and this analysis specifically is that it really is fractal in nature, right? You can use it on all time frames. Okay, before I go, are there any other pairs or anything that could be anything really? Euro Swiss, if you have time, of course. Hold on, I had it over here. Different. I guess not. All right, two levels to know. We are coming up to 200-day. It's a little higher, so it does jive with the idea that you're going to get taken out, or we're going to get taken out on some of this euro at a better level. 117.1697 to be specific is the yearly opening price. I thought I had a better workspace somewhere. I might have it saved somewhere else, but here, let's just go through and draw this together because I already know what it is. All right, if we go back to, I think it was this low. We didn't draw off the actual S&B low, of course, but this low, in other words, the day after low. Yeah, that's what we were looking at. All right, so this is beautiful. So drawing off of the low after S&B, and it's got to be log scale, but draw off that 116 2015 low, and then the 2016 high, right? And it's, there you go, it's even cleaner there. Draw it off this low here from April of 2017, and you can see that we're trading, just as the median line, analysis or median line techniques say we should. We're trading between the 75 line and the 25 line, right? Look at all this important price action, right? Resistance, resistance, resistance. And then I wrote in a post, I guess, a week or two ago, that now that we had hit this level, right, the 25 line, our focus for euro should be to the upside. So euro dollar long would be a better, play than dollar Swiss short. And I'm looking towards the center line here, right? The median line stuff here is more important to me right now than the 200-day average. So that's going to be up in the, it's above 117. It's essentially over all these highs over here, right? So this area, call it 1710 to 1740. That's going to be the spot, I believe, for resistance in Euro Swiss, and maybe, by extension, maybe that's where you get, euro resistance, like euro dollar resistance. So it's a good chart to look at. Mahai, I'm glad you asked that question, because this is something to be aware of. All right, but yeah, we are trading beautifully here within this channel. So, continue to play the big channel levels in this. All right, that's it for me. Thank you all very much for your time, as always. And I'm going to get this posted. And Ziad, it's wonderful to have you here. Have someone that went to Wash U. I love it. And everyone have a great rest of your week. All right. Talk to you guys later. Bye.